Hi friends, welcome to our Tax TV channel. Planning to save LTCG tax by buying new house? Government extends time limit till March 31, 2023. The Central Board of Direct Taxes, CBDT, has extended the last date for individuals planning to save long-term capital gains, LTCG, tax under Section 54 to Section 54GB, as per the circular issued. An individual who has earned LTCG by selling a house or any other capital asset and wanted to invest the LTCG in specified instruments, usually a residential house or specified bonds, to save tax between April 1, 2021 and February 28, 2022, both dates inclusive, now have time till March 31, 2023 to do so. The CBDT has issued a circular for this on January 6, 2023.
The Income Tax Act, 1961 provides an option to individual to save tax on LTCG by investing in specified instruments under Section 54 to 54GB as applicable. Suppose an individual has sold a long-term capital asset on April 21, 2021 and last date to invest in 54AC bonds to save tax on LTCG is October 21, 2021. However, he failed to make such investment. Now by the virtue of the circular, the last date of investment in 54AC bonds would be March 31, 2023. This is because the due date of investment falls between April 1, 2021 to February 28, 2022. Generally, an individual has three options to save tax on LTCG under the Income Tax Act. An individual can save tax on LTCG under either Section 54, 54AC or 54F. An individual can save tax on LTCG using these three sections below.
A. Under the Income Tax Act, an individual can save tax on LTCG under Section 54 by buying a residential house. The LTCG must have arisen from selling of residential house to be eligible to save tax on LTCG under Section 54. The tax on LTCG under Section 54 can be saved if the house is bought within 2 years from sale or 1 year prior to sale of asset or constructed within 3 years from sale date.
B. If an individual does not want to buy a residential house to save tax on LTCG, then she has an option to invest in 54AC capital gains bonds. Once the long-term capital asset is sold, an individual is required to invest the LTCG amount in specified bonds within 6 months from sale. These bonds have a tenure of 5 years. An individual will earn the interest on these bonds. The interest earned is taxable in the hands of individual. An individual can invest maximum of 50 lakh rupees under the specified 54AC bonds.
C. Third option available to individual is Section 54F. Under this section, an individual who has earned LTCG from any asset, other than residential house, can invest the LTCG in a residential house to save tax. Here also, tax on LTCG can be saved if the house is bought within 2 years from sale or 1 year prior to sale of asset or constructed within 3 years from sale date. For example, say you have earned capital gains from selling of equity shares. Now, if you wish to save tax on LTCG, then you can utilize LTCG to buy a residential house. Please subscribe.